right, my name is Andy. Now Gladys gets the pleasure of sitting through this twice. Because she was here last week, I did it last week, and there were only 4 people. And I believe, you can attest to this, that everyone really enjoyed it. I only bought pizza. So Gladys and Iris said, hey, come back. And I was free today, so it worked out. And they said, maybe 10 people. I said, that'd be great. So I bought lunch for 15. So you guys might have some food to go. So I'll get going. So my name is Andy. This is just a little overview of what you can expect. This is supposed to be informative and fun. I'm going to do a little introduction, which I'm going to do all now. I'm going to do a short presentation, which has 3 parts. The dirty details about life insurance. Final expenses, what it costs to die, which is unfortunately extremely expensive. We started talking about that. I'm going to get into those details for you, and then the benefits and pitfalls of with different kinds of life insurance and that sort of thing. And then I'm going to give away some raffles at the end. You guys, as you were down there, have a really good chance of winning.
By the time you get there, other people will come and will lose.
Well, I have 3 raffle prizes. Okay.
Somebody.
Just remember us. Just
I
call.
We got to hear it. That's our right.
So that's me. I'm Andy Cohen. I'm technically what they call a field underwriter. I own an agency called Safety Net Life in order to work through the state's program, which I'll get into. It's all through the Guarantee Association, so it's backed by the state. You have to have an agency. So I'm an independent, and I do a lot of work in the senior community. It's all I work with. The seniors, I focus on making sure they've got ironclad coverage. Is this gentleman coming in? Looks like he smelled. I think he smelled the chicken. I saw him.
Yeah.
I told the other lady.
Nice.
Oh, thanks. He's a winner. He usually wins the prize.
I can bring this thing for you.
Oh,
later.
they go there.
Thank you, girl.
It's played on the end.
How you doing?
All right,
I'm Andy.
Barry,
Nice
you
to meet
ready?
you, Barry.
Yep.
Come on over, Barry. Get yourself situated. Come on. I just got started, so your
It looks good.
time is perfect. So again, I'm a field underwriter. I do a lot of eligibility. That's really what I focus on. I'm not here to sell the insurance. It's not what this is about. My role as a field underwriter is I work with about 18 different carriers in the state that work through the Guarantee Association of Florida. I have no loyalty to these companies. My responsibility is to the resident of Florida to make sure they've got the best coverage they can get in the state. So let's start with part 1, the dirty details of your life insurance policy. Okay? Now, who has life insurance in the room? All right. How about you, Barry? Do you have life insurance?
No,
Okay.
that's why I came down to see what's going on.
Perfect. So there's 2 main types of insurance. There's actually 3. I'm going to get into all 3. The main 2 is whole life.
In your head.
Yes, ma'am.
I
The floor guy. The floor guy.
Thank you so
You're
much.
welcome. You're welcome. Let's do slow.
You were too far. That's okay.
So there's whole life and term life. Who knows the difference? All right. All right. So I'm going to tell you anyway. So term life, they offer these not-for-stock offerings. High death benefit amount, low premiums, not-for-stock rates. It's kind of like when you see $1 a day, $9.95 TV commercials. That's term life insurance. It's great for financial security during your primary earning years. You got a mortgage, you're making money, you're working full time, you have young children. It's great for that. It's very affordable when you're young. It's not offered beyond age 80.
Not what?
Not offered beyond age 80. So if you have a term plan, you can expect when you turn 80. Some companies now at 85, your term policy is going to be gone. The rates may increase periodically with term policies. A lot of people don't know that when they take it out. There's no cash value, which means if you decide I don't want this policy anymore and you're done with it and you cancel the plan, you don't get any money back. Everything you put in is gone. It goes right to the carrier. It expires at the end of the term. That's what term policy is.
Who gets the money?
Just normally the insurance company gets the money. So what happens is you pay a premium every month and it's for a term. So you'll hear 20-year term, 30-year term. That means you have it for those 20 or those 30 years. At the end of the policy, You don't get any money back, and that's the end of it. The difference is
Right,
whole life.
Whole
Whole life insurance, it's not as much bang for your buck, it's a little more modest as far as the payouts. It's designed for affordable solutions for final expenses and for legacy gifts for the family. You want to leave something behind for the family, a little bit of money, this is what whole life is for. It's more affordable when you're older, it never expires, it never cancels, the rates will never go up on you. It builds cash value, which means if you win the lottery, I like this example, and you decide, I don't want this anymore, I don't need it, you cancel the policy where your cash value accumulates and you get some money back. You can also borrow from it, it's a nice resource to have. All whole life has cash value, term life doesn't have any of that. The biggest difference is it's guaranteed.
Is the premium higher?
It can be, yes, but it depends on how much coverage you want to have. Yes, sir.
How much is the monthly, premium?
It totally depends. I'm gonna get to that. I'll get you all that information again, absolutely. So, whole life is guaranteed. Term life expires at the end of the term. So that says 98% of term policies either cancel because the rates go up and people can't afford them, or the term ends and they expire. So 98% of policies don't even get paid out. So that's why they offer you these knock your socks off rates, because only 2 out of 100 are actually gonna pay when somebody dies. Whole life is guaranteed. I've been saying for years, the difference is term life is for if you die during the time frame, whole life is for when you die. So whole life is guaranteed. Then there's something called universal whole life. These are tricky. It's kind of a hybrid of term life and whole life. Kind of a hybrid, a little mix of both. You get some of the good elements of both plans. It's very, very commonly sold as flexible whole life, is what they call it a lot. It's been sold a lot since the 80s and 90s. The policy, the way it works is a little bit complicated, so I'll just touch on it. As you build cash value, that money is eventually yours if you cancel the policy. There's something called the cost of insurance. When you're 5 years old, it's really cheap to insure you. You're probably not going to die anytime soon. But when you're 85 years old, it's very expensive to insure you. People are dying left and right at that age. So the insurance company has something called the cost of insurance for everybody in that age bracket, in that age range. Well, the cost of insurance is a lot higher. So if you continue to pay the same amount from when you started the policy, the cost of insurance goes up. The difference that you have to pay is more than the premium. That extra money, you don't have to pay, but it comes out of the cash value of the policy. I just had a situation last week where somebody thought they had $35,000 in cash value. They looked 5 years ago, now suddenly they have $2,200. You know, like, what happened? Well, she's 81 years old. She got the policy when she was 32. She has the policy still, but the cash value diminishes because she's been paying $40 a month per her. Well, you have to pay more if you have universal whole life. So as you age, the cost of insurance goes up. These policies are complicated, clearly. I'm having a hard time explaining it to you guys right now.
Sounds a little more.
Right? It's something that you don't want. Now, it's got its pros. There are some advantages, but they often weren't properly explained to the policy owner when they were sold. That's the biggest problem I have. They're often referred to as whole life, but they don't always provide the guarantees of traditional whole life insurance. You have to be very careful if you were sold universal whole life, especially if you ever borrowed the cash value. You have to be very, very cautious. Now, of the one, you have insurance. You said you have whole life insurance? Okay, gotcha. Well, we don't have to worry about whether your whole life is actually universal whole life, but that's very, very common. It's crazy. I thought, no, I'm said I have whole life. And I asked them, let's see your policy. I provide a free service for seniors to make sure that they have ironclad coverage. 1 out of 2 times, 46%. So just under 1 out of 2 times. I look at it, and there's an escalation clause. So they're paying the same amount, but the rates are going to go up, or the benefit goes down, or they technically have whole life insurance or universal whole life, and they're not as covered as they think they are. That's the problem with some of the policies. So I offer free policy review. I'm an expert in helping seniors. I only work with seniors on fixed income, in fact. So, we understand that every penny absolutely counts. It's critical that you have a good handle on what you're spending your money on. The money comes out of your account, you want to make sure you're really paying for something that's valuable to you. So I offer free policy reviews where we discover if there's cash value, how you can use it, will your payments ever go up or go down. That does happens sometimes, that's nice. Are your beneficiaries accurate, up to date? What happens if your beneficiaries aren't alive? You have to stay on top of those things. I help you with that as well. Does your policy have an expiration date? Is it term? Will your death benefits ever go down? Very common. Should you be receiving dividend value? That's the interest you make on your cash value. Sometimes they start sending you checks. I talk to people who are like, I get dividend value. I'm like, great, you're set up. And other people are like, wait, what's that? Well, you should know if you're eligible to get that. And most importantly, we have whole life or term life or universal life, which is better for you at your age, and you have the most affordable and beneficial option available. Those are great. So I offer a free service for seniors. I do it in Broward and Palm Beach County to make sure that you've got ironclad coverage. So if you have insurance, I'd recommend let me spend 5 minutes and do a free policy with you and make sure.
I should just like it is, because I have whole life index, so.
It was indexed universal, yeah, that's,
I had that.
right, it's not good, yeah.
No, I had it, I don't have it anymore.
Okay, good, you're smart if you have it, that's good.
Not that I have that money, so.
Yeah, see, that's what happens. Well, anyway, so, let's get into